How is it possible that some people make life-changing money in the crypto market while others just lose their hard-earned money? Hey guys, my name is Weijerman and I've been in the crypto space since 2017, and since then I have made multiple millions in the market. Since 2020 I actually became a full-time investor because I was able to live entirely from the income from my investment portfolio. And as a result, I've been able to buy my dream homes in Bali, Dubai and Amsterdam. And many people around me asked me what my investment strategy and philosophy was. That's why in 2020 I created the Early Retirement Club, an online education company where I shared my investment strategy and philosophy with hundreds of investors around the world. And those investors are now also crushing it with their investment portfolios. Now that you know who I am and what my track record is, I need to give a quick disclaimer. I'm not a financial advisor. Nothing in this video is financial advice. I'm making this video just for educational purposes. If you're doing any investment, make sure that you always do your own research and or consult with a professional financial advisor. And if you want to see more valuable videos like this, make sure to like this video and to subscribe to my channel, because every week I'm going to be posting valuable videos and tutorials that are going to help you to get an edge in the market as a crypto investor. Let's get started. Most people are not investors, even though they say that they're investors. They are gamblers. They have no idea what they're doing. They have no strategy and no game plan. That is the perfect recipe to lose your hard-earned money. I've been able to make a ton of money in the crypto market with taking just little risks. How? Well, I've learned how to do my own research. Now I can look at a crypto project, analyze it, and determine for myself whether it's a good investment or not. Today, in this video, I'm going to share my 6-step framework that I personally use to analyze crypto projects. This framework helps me to understand whether a project can generate big returns while at the same time managing my risks. This framework helped me to 10x my own investment portfolio and allowed me to have more wins than losses. And by the end of this video, you'll become a pro at analyzing crypto projects too. Now, before we dive into the nitty-gritty of this framework, let me give you a brief overview of the 6 steps of this framework. The first step is to understand the ownership structure and the decision-making model of the project. The next step is to analyze the tokenomics. Then in step number 3, we look at the token release schedule. In step number 4, we look at the supply reduction mechanisms. In step number 5, we analyze the technology driving the project. And in the final step, step number 6, I call it explain it to your mom. Now that you have the overview of what we're going to be discussing in this video, let's dive in. Step number 1, ownership and decision-making structure. Whenever you're analyzing a crypto project, it's always important to analyze who holds the majority of the tokens of a project. Because if there is one or a few investors that are holding the majority of the tokens and are holding the majority of the power and influence over the project, they will be very tempted to sway the project in ways that will probably favor them. On the other hand, whenever the tokens are distributed across a large group of token holders and there's not one or a few entities that are holding most of the power and influence over the project, then probably the project will be run in a way that favors the majority of the people holding the tokens. You can compare this to shares in a company. Whenever there is one big shareholder or a few big shareholders, they will probably influence the voting in a way that benefits them the most. Whenever there's many smaller shareholders, like for example with many shares of publicly traded companies on the stock exchange, then you can probably expect that decisions are being made that will favor all of the shareholders, so all of the individual holders and not just a select few. Also, when there's one or a few big holders of a token, it creates another risk, because if they suddenly decide to sell all of their tokens and dump it on the open market, then the price will tank for everyone and you'll be left holding the bag, probably of tokens that are completely worthless after such an event, because this will trigger a cascading effect of FUD, fear, uncertainty, and doubt, and mass panic selling by all the other holders. One website which I really like to understand who holds the tokens in a project is coincarp.com. CoinCarp has this feature called the rich list. And the rich list basically shows you the top 100 holders of a crypto project. So here you can see that right now, the top 10 holders of Solana own approximately 6.6% of all of the tokens. The top 20 holders of Solana hold approximately 11%. The top 50 holders own around 17.5%, the top 100 holders 22.7%. Let's compare that to another project, for example Cardano. So here you see that the top 10 holders of Cardano own approximately 9.4%. The top 20 holders own approximately 11.2%. And let's skip straight away to the top 100 holders. They own roughly 21% of all of the Cardano tokens. Now let's compare that to Bitcoin, which is arguably one of the most decentralized projects in the crypto space. So right now you see that the top 10 holders of Bitcoin own roughly 5%, and the top 100 holders own approximately 14.4% combined. So this tool, coincarp.com, and in particular the rich list feature, is very interesting if you want to understand who holds the tokens of a particular project. I hope this was a useful demonstration of this tool. Let's continue. In addition, it's very important to understand how decisions over the future of a project are actually made. Is there a central entity or organization or a foundation that holds all of the power to make decisions over the project? Or is there a decentralized autonomous organization, a DAO, in which all of the token holders get to vote about the future direction of a project? The more decentralized a project is, the more healthier it is. So that's why it's always important to look at how decentralized or centralized a particular project or governance structure is. For example, Ethereum has the Ethereum Foundation, which holds all of the power to make decisions over the future of the project. Bitcoin has no central authority. It is completely community run. It's like a democracy. Ideally, you want to look for projects that are decentralized, but it is not necessarily a bad thing if a project is centralized right now, because sometimes you just need to have a central body that can help and assist in getting a project to become established, but you would want to see signs on their roadmap that in the future they want to make it a little bit more decentralized. For example, by establishing a DAO, a decentralized autonomous organization. Now it's time for step 2 of the framework, which is the tokenomics. This is all about the economic mechanisms behind the crypto project. And a few things are important. Number 1 is a circulating supply. That is all of the tokens that are currently available on the open market. Next, we have the total supply. So the total supply is a circulating supply, including tokens that are currently locked up or vested and that will be released in the future as well. For example, to team members or early investors. Then we have the price of a token. Well, if you've paid attention at your economics class, you understand that the price of something is usually determined by an equilibrium where price meets demand. And then we have the market cap. The market cap, or market capitalization in long form, it is the total value of a project. To give you an understanding of how you compute the market cap of a project, you simply take the circulating supply and you multiply that with the value of just one token. So let's say that one token right now is worth $2, but there's 1 million tokens circulating on the market, then the market cap of that project is 2 million. A market cap gives you an idea of the size and the potential of a project. Usually a larger market cap indicates a project is more established in the market. One of the best sites where you can see all of this data very easily, it's completely free, is coinmarketcap.com. Over here on my screen you see an overview of all of the different crypto projects, ranging from Bitcoin, the most valuable project in the space, all the way to much smaller coins. And here in this overview you can see the price, which we've discussed. You can see the market cap, the trading volume, the circulating supply. And if you click on these projects, you'll be able to get a lot more information as well about them. There's many different tabs, charts, things you can check out. So this is one really great, useful resource if you want to analyze particular crypto projects. Okay, the third part of the framework is all about understanding the token release schedule. And for this, we're going to zoom in a little bit more on the supply side of the token. So of course, price is determined by supply and demand. In this case, we're looking at supply. We want to understand in particular if there's any mechanisms to increase or decrease the supply of a project. If the supply of the project gets decreased over time, we call it deflationary. If the supply of a project gets increase over time, we call it inflationary. And this is often outlined in the white paper of a particular crypto project. Let's look at a few reasons why a crypto project might want to increase its circulating supply over time. Let's have a look at ADA, Cardano, for example. Cardano wanted to incentivize their holders to stake their Cardano tokens. And these staking rewards, these juicy APYs, had to come from somewhere, and that is by unlocking more tokens in the future that could be paid out to the people that were staking their ADA tokens. So ADA had to have new tokens released in the future in order to pay people their staking rewards. Another reason why the circulating supply of a project gets increased over time is because of token unlocks by early team members or investors. One of the big risks if someone earns tokens or invests in a project and they get a lot of tokens very early is you give them a lot of power over the price of a project. So if they decide to dump their entire crypto back on the market, then usually it means that the price tanks a lot and that there's a lot of selling pressure or potential selling pressure. So by vesting these tokens over time, allowing them to be unlocked when specific dates or milestones are achieved, then gradually over time you slowly give those tokens to those team members or early investors, and this just is a lot safer for other people that are holding the crypto tokens. It reduces the risk of the market being dumped by these participants. So always make sure that you analyze the token release schedule of a particular project. You want to look for projects that are transparent about these token release schedules and that the token release schedules don't create any risks for holders of the tokens. The best way to understand the token release schedule is to read the white paper of a project. One website which I found, which contains almost all of the crypto white papers, is a site called allcryptowhitepapers.com, which contains a database of, like I said, almost all of the crypto white papers. So with a few clicks of a button, you can download the PDF file of the white paper of the crypto project. And one fun hack that you can do if you're too lazy to read the entire white paper, probably many of you are, then you can also upload the PDF document to ChatGPT and you can ask ChatGPT to analyze it for you and to give you a summary of the token release schedule or any important other things that you should understand from the project based on this 6-step framework, of course. Another tool that you can use to understand the token release schedule is a free tool. It's called tokenterminal.com. I think it is created by CoinGecko, if I'm not making a mistake. But here, if you go to tokenterminal.com, some projects also have a vesting schedule, which is shown here on Token Terminal. So here you see the vesting schedule of Stargate, STG. Here, when you hover your mouse over the vesting schedule, you actually see the breakdown of the token releases, to whom these tokens are released, and how many tokens will be released. If we look at another example, for example, Arbitrum, you see that there are different people that will be receiving these tokens that will be released in the future. And you can hover your mouse over it to see how this all changes over time and how this impacts the circulating supply. Now, Arbitrum and Stargate have very similar token release schedules. But here, if we look at Aptos, for example, it's a completely different story. A completely different chart. Again, it's an interactive chart. You can hover with your mouse over the chart to understand how many tokens will be released and to whom. In the case of Aptos, many tokens will actually be released to the community, which is different from Arbitrum and Stargate. But it's always important to check this before you make any investment in a project to understand who holds the bag. So step number 4 of the framework is actually looking at token reduction mechanisms or supply reduction mechanisms. Earlier in the previous step, we've looked at mechanisms where more circulating supply is actually added to the market, but the exact opposite can happen as well. There are mechanisms where the circulating supply gets decreased. And if demand stays the same while the supply actually shrinks or becomes more scarce, then usually it means that the price of a particular token or asset tends to increase over time as demand drives up the prices. And that is really great for holders. One great example of a supply reduction mechanism is that of the BNB token. So BNB actually uses a percentage of their profits, of their transaction fees, to buy back tokens of BNB on the open market. And actually, when you analyze this project and you look on their website, you'll see that they've actually announced that they want to cut the supply from 200 million available tokens all the way down to 100 million tokens of BNB. So that's really good. That means that BNB will become more scarce over time. Ethereum is also a great example of a project that burns part of their supply. So every year they take a certain percentage of the gas fees on the network and they will just burn it, meaning that they send it to a wallet that nobody can access. So basically they take supply off the market. Burn or supply reduction mechanisms are usually a huge green flag. It means that a project is focused on maximizing the value for its holders. The fifth part of the framework is actually all focused on the technology side of the crypto project. So in particular, we want to understand if a project is an innovator or if it's an imitator. Oftentimes when we see an innovator have a lot of success, we see copycat projects popping up left and right that are just trying to capitalize on the hype that a particular project is having. Nowadays, it's very easy to spin up a landing page, put a bunch of buzzwords on it, and to convince investors to throw their hard-earned money at you. For example, when Uniswap was launched, it was one of the biggest and most successful decentralized exchanges out there, but it also triggered a whole wave of different copycat projects. We've seen all different flavors of swaps and dexes popping up that just put on some fancy buzzwords and imitated the innovator. And if you're just following the hype and you're falling for projects like that, then it's going to be very easy for you to lose all of your money due to rug pulls and scams, because there's plenty of them out there. And that's why I tend to focus on innovators, projects that are really building something of value and that are contributing to the space. One great example of an innovator project is the Graph. The Graph is indexing different blockchains, making them more easily searchable and accessible. There are already many different projects building on top of the Graph, and basically the Graph is like Google for the early internet. It's making it a lot easier to access certain parts of the Web3 space. Just imagine the impact that Google had on our lives and on e-commerce and on the internet. The Graph might have the same impact on the blockchain and how it impacts our daily lives. And that's why I think it's a really interesting project, and I like to find projects like that that are actually doing something of value. The final step of the 6-step framework is called explain it to your mom. And this is not some kind of joke, no. I have made a lot of really bad investments, lost a ton of hard-earned money along the way. I can laugh about it right now, and I call it my tuition fee. But I could have easily avoided those mistakes. If I look back at all of those bad investments, I see one common trend. I didn't understand what I was investing in. So I've created a golden rule for myself right now, which has helped me to weed out a lot of bad investments. And that rule is, if I don't understand it, I'm not investing in it. And the easiest way to test if you truly understand something is by explaining it to your mom, your aunt, your neighbor in simple words without any buzzwords or technical jargon. This rule has helped me to really improve my results as an investor, and I'm pretty sure that it will help you to do the same. All right, so this 6-step framework will help you to analyze crypto projects and help you to find winners amongst all of the different participants in the market. And at worst, it will help you to weed out your losers. So I hope that this framework will help you to make a lot of money in this upcoming crypto bull market cycle. If you enjoyed this video, make sure to like it so I understand that you've got some value from it. And if you want to see more similar videos like this one, more useful tutorials, more breakdowns, then make sure to subscribe to my channel, because I'm going to be posting videos every single week to help you to get an advantage in the crypto market. And I've also made sure to link 2 more videos up here, which I highly recommend you to check out. All right, peace out. See you in the next one.